Right now, let's move to another topic. Now, all marketers have stated that Nigeria will soon heave a sigh of relief as the pump price of petroleum motor spirit, popularly called Petrol, would drastically reduce due to the continuation of crude and refined product sales in naira initiated by the federal government. They also stated that a major player in the sector, Dangote Refinery, has lowered its landing cost already as at the end of this week, further contributing to the reduction in fuel prices. An expert in the oil and gas industry reassured the public of the forthcoming price drop, while commenting on the federal government's directive regarding the naira-for-crude agreement announced on Wednesday. Now, the official, however, couldn't project the expected amount, as the price at which the government will sell its products remains unclear. Now, Professor Ken Ife, he is a development economist. He also wears another cap, President, Institute of Professional Economics, Economist and Policy Management, Nigeria. Thank you so much. Professor Ken Ife is also live in the studio. It's good to see you here in the studio,
Thank
Prof.
you for having me.
Thank you, Prof. Prof, I think we should start with this naira-for-crude thing. You know, I was looking at some monetary and fiscal issues, but you know, we stayed on this the last time we discussed. Yeah. Finally, the agreement, I think, is we put pen to paper again. But to you, the back and forth and what the positives this holds for us, how does it come to you?
Oh, it's good news, actually, because I was getting rattled by that inconsistency. We have the opportunity of a lifetime to have big boys enter this ring, this boxing ring. And it's not just Dangote, but also modular refineries. And then I have 2 refineries that are purported to have been working from NNPC. So you need to give them a few days to manage our destiny and not toy with their fate. So I was happy that there was a pushback from Dangote. And then I'm also happy that he also showed instant goodwill. Instant goodwill. But obviously, by the time we take stock of the decline in prices of crude, and it's going to be further decline. It's going to go down. Without a doubt.
Yes.
I know that they will also come back to pass those benefits to Nigerians. So I'm very, very confident about that. And I'm not listening to what the oil marketers are saying. Up the price. Oh, come on.
What about the availability?
You can't be importing these products when there is surplus in the country. It just doesn't make sense. And in any case, anyway, whatever the arguments are, Nigeria is moving into a very, very dangerous policy angle, because 2020 COVID period is nothing compared to what we are going to see now. It's not compared to what we are going to see. The fallout will be phenomenal, because it will affect trade policy, monetary policy, fiscal policy, industrial policy, and investment policy. All the policies are going to be shattered. I'm telling you that. I'm not prophet of doom, and I'm telling you the reality of what is going to happen. And it's only just beginning.
Prof, you know that clearly this would help reduce strain on the dollars too. That's this naira-for-crude thing. On the dollars, yes, because we started seeing a sharp increase even just between those 2-3 days. But moving on, I was asking you about the availability. Some say there are commitments abroad for international oil producers. There are deals that Nigeria have signed to paper. So if we don't ramp up production, are you sure that this naira-for-crude thing will not be at any risk?
No, there's always risk in everything we do. But remember that there's a law. The PIA law says you must satisfy local production capacity.
Yes.
It is stated there in the law. And this law didn't come today. It was signed into law in 2021. And it has always been around for the last 20 years being debated everywhere. So everybody knows. And then if you think that your commitment is going to be, after all, Nigeria securitized, the new administration securitized part of our crude revenue. So to Afrexim. So that is also in the mix. So, but the fact of the matter is this: we have to, in a world that is in trouble right now, we have to fall back on our own productive capacity in this country and rally around our capacity for our own survival. That's the point. And if you have the likes of Dangote, he's taking $20 billion and it's a productive capacity originating here and locating itself on adding value to our local materials, that has to be top priority. And I tell you why: because all the shenanigans on going up and down or falling or through and all that stuff, it is going to come back to roost. So the chicken will come back to roost. In the end of the day, what will define our survival as a country is the extent to which we capitalize on this massive investment. I should be saying to government, you got a critical mass of $20 billion investment here.
Yes.
Create a program of $100 billion ecosystem around it. And it's all manufacturing capacity, the internal manufacturing capacity.
Fear of energy security.
That's right, because this all comes into the mix so that you can hold yourself against the turbulence coming from collapse of global trading system. That is the top priority. So if you know in the room and doing something right, if you see cement being manufactured right, if you see people surround this top production capacity with our MSMEs. Because that Dangote Refinery can support 5,000 MSMEs manufacturing one thing or the other, tire, these chemicals, all kinds of things. Manufacturing based on your local material, that is your survival. And then you can export. If you don't export abroad, why are you exporting abroad? You export to the rest of Africa. Do you understand what I'm saying? It's a survival strategy that is based on your strength, that is built around your own economy, than trade, than simply trade. And that, see, look, WTO tells us that what is going on between America and China, it could come down to by 90%. The trade between the two can come down by 90%.
Wow.
To 10%. Nice. Do you know what that means? Why would you be expecting China to be stockpiling crude when there are issues around their productive capacity and how to find market for the one that they have been producing and trading?
But Prof, let's move a bit away now because we know that, of course, the price of PMS affects the inflation figures one way or the other when there's that flip-flop, gas, energy prices and all of that. And we're expecting another figure to come in anytime from now. Today is, I think it's few days now we'll get the coming inflation. Correct. Now, let me ask you the question this way. What are your expectations considering this flip-flop that we've seen with regards to price of PMS? How is it going to affect that expected outlook from the NBS?
I don't think it will. That actually, okay, first of all, when you analyze the last figure of inflation.
After the rebasing.
Yes, after the rebasing, the second one actually showed that all sectors, subdivisions, all had an increase. Yes. What happened was that the rate of increase was less than the previous month. The only one that didn't have an increase, that actually had a decrease, was energy, and it was the petrol. 0.9% drop. That was the only one. You could tell that was about what happened in December. You know what happened in December? The Dangote factory decided, look, we're going to have all this price everywhere in the country. And for you to do that, you have to have equalization. And equalization fund cost them over $10 billion naira. Because the equalization was taken out. And they are still fighting with the oil marketers that are owing them 100 billion or 80 billion, whatever, that are still arguing. So they had to foot it for that price to apply everywhere. That 10% bill. Now, that is already being contended because you've got this flip-flop about that. But what I'm saying, I think, is this 1 month, it may not have much impact because what has happened has only happened within a window of 2 weeks. Even the global turbulence now on tariff, you won't see it in this figure. It will be in the next month's figure. Even the current drop in price to $63 to $60 and then going down to even 55. 50 something. Yes. You won't see it in this last month's figure because the statistics have already been taken. True. So it will all be in the next one that you will see the impact of all of this.
But are you expecting it to impact significantly?
Oh, absolutely. It's going to be tsunami. Now I'm telling you, it's going to be tsunami. Because I was trying to take you down that road. If there's a meltdown, of 90% drop in the size of the production between America, the trade between America and China. Can you imagine the impact? The two biggest world economy that have, you will see the impact. First of all, China will have to find somewhere else to ship these goods to. There are two things China will do. China will devalue so that automatically those goods become cheaper and people everywhere will buy. Secondly, if they are going to target a market like Nigeria, they will say, okay, for products that go to Nigeria, I give you subsidy, this company, so that you can import. They can lower their price. Two things are going to be happening. Dumping of goods into the country and then predatory pricing into the country. Now, every dollar that can be found in Nigeria will be picked up by traders to import these goods. And this is because Nigeria is an import-dependent economy. So you are going to see pressure on foreign exchange coming from people wanting to find dollar to import these things that have turned out to be cheap, coming from wherever else apart from China. So it's going to be a lot of pressure on foreign reserves as well, because when the foreign exchange rate starts ticking up, which it will, then it starts having a call on the foreign reserves. But it's not just that. The drop in, I did some impact, revenue impact of up and down of the current drop in the price. I looked at, the benchmark was $75, now it's 60 and less, 59. Then the production volume was 2.06 million barrels a day, is about 1.6. I did some impact, upper and lower limit. Where I'm seeing 36% drop in the revenue to 56% drop in the revenue of the government. Now, don't be mindful of the fact that we already securitized some part of these revenues, and we are going to have this impact. And then also the cost of extracting one barrel is around $30. So there will be serious impact. Let me tell you the two dimensions. One, you will be looking for dollar to maintain our debt service that are denominated in dollars. You're going to be looking for dollars to do that. Then secondly, you're going to be looking for dollars to pay those who have been involved, portfolio investors that have come in good faith and invested because we have stabilized our forex. And if they see prospect that the turbulence could cause a rise in the exchange rate, they'll be looking for their dollar right now to cash in. But government may also go to the market for Eurobond to get dollars to help service the debt. And you've known that the last one we did was at 10%. So people were borrowing at 3%, 4%, 2% to cash in at 10%. But this is smaller than borrowing at 4% to come and collect 22% on treasury bills, as long as the exchange rate parity was, do you know what I mean? Yeah. So, but it is cheaper for them, it's easier for them to move their money out immediately and come back on Eurobond type of thing, or run to safety. And running to safety means go to U.S. Fed reserves, because their money is the safest there. If there's any problem, America is never going to pay their debt. Anytime there's a problem, they'll print more dollars. So these are the tension. But look at how Nigeria will be in receiving end. We're going to be in receiving end of demand for dollar, demand by government to pay that, demand for government huge budget. There will be bigger budget deficit, much bigger. And that has to be addressed because that is law. The law says it can't go beyond 4%. They've got to look at that quickly and then make sure they bring it down within the legal limit. Yeah. You understand? And then you've got all that, and you can't mess with loan repayment. If you mess with loan repayment, all the rating agencies will come down like a ton of bricks. Yeah. So you can see and then let me tell you this: you have this impact on trade policy. We are going to be looking what is going to be the new trade policy. We don't know. We haven't even written the one since 2005. We're still working. And the one we wrote in 2012 hasn't been, I don't know, but we're going to have to be fighting. And ECOWAS will have to come and fight as well. Then you also have industrial policy. How you respond? You're going to have more emphasis, more investment in productive capacity, and also in processing, so that you can. The only thing that will save any country now is what is it that you have in your country that you can manufacture. Not the things you can trade, not the things you can trade on. No, the things you can manufacture to feed people, to clothe yourself, and to build house. That's the only three things. So it is all going to be around the manufacturing cluster. So the industrial policy is under pressure. Then the investment policy, we've already seen that. We are not getting FDI anytime soon. Then the foreign portfolio investment is in trouble now. They're looking for their money. Yeah. Okay. Now, where are you going to get it? Where are you going to get all those? Then it comes to fiscal policy. Fiscal policy reforms will help because it would release more revenue inflow to government. Even if government says we are also comfortable, we can absorb this 34% drop in price, are you going to get the dollar? It's naira that you will get, but you're not going to get the dollar. And then you're going to still face further devaluation, which also means more pressures. So it's very complex. I've already talked about the monetary policy side. Then you got monetary policy, you have fiscal policy, you have industrial trade and investment policy. All of them will be they will be on the witness stand. All of them, all the policymakers.
Interesting conversation. There's never enough time to talk to Prof, but I must say thank you so much as always. And thank you for coming through for us today. Professor Kenny is a development economist and is the president, Institute of Professional Economists and Policy Management, Nigeria. Thank you so much. Have a great weekend, Prof.
And you too.
I will hope for a better Nigeria as always.
Thank you.